Okay, good afternoon. This is Brian with NetPicks. Thanks for taking the time to be with us today. And we're very excited to bring to you today Robert Green. At this point, I'm going to go ahead and put some questions up. Again, as I said, if you could give us a response, I would appreciate it. I'll wait till about 80% of you click in. And we have about 5 or 6 questions we want to ask you and get a feel for the type of trader that we have in today's presentation. So let me get those questions popped up here. One moment. Okay, first question is, are you having trouble reconciling your 1099B to your Form 8949? And so if you don't know what that is, don't worry. We're going to walk through it today and lay it out for you. We're also going to talk about some of the issues that are currently kind of in play. Brokers giving us information that isn't correct and how that could impact your filing. So I'm going to go ahead and close this. We've got a good portion of you that have voted, so to speak. And so most of you, or some of you know what it is. About 29% have not, or not having any trouble. And then 56%, a good portion of you not sure what it means. So again, Robert's going to take us through that whole issue and what that means to you as an individual trader. So let's go on to number 2 here. Okay, next question is, what accounting solution do you use for your securities trading? Do you keep a trade log? Do you have an accounting program? Do you rely on your brokerage reporting, the 1099 that you get at the end of the year? Do you have an Excel or similar worksheet program? Or do you use QuickBooks or similar consumer finance program? And so the vast majority of you relying on brokerage reporting, the 1099 that you get at the end of the year. And second place is an Excel worksheet. And then a trade log comes in third. So interesting. Let's go to the next question, number 3. Have you already filed your 2011 tax return? If you're going to file an extension, obviously we want to hear that because we're going to talk about some potential relief that you can get from the IRS this year. So that's an important stat for us. I'm going to go ahead and share the results. So about 50-50 split between yes and no, still hoping to file on time. And 6% of you filing an extension and 24% still working on that extension. So we've got some good information that Robert's going to share with you on the extensions, and you may apply, like I said, for some relief. You may be able to put off any kind of payment until later in the year. Next is, are you paying your 2011 taxes by 4/17 in 2 weeks? So yes, paying in full. No, you're going to pay that 90% requirement if you can get the right number. No, you're going to use Form 1127, hardship relief, to pay much less. Or no, you can't pay and don't qualify for the penalty relief. So I'm going to go ahead and share the results. So roughly 88% of you saying yes, you're going to pay it in full. And if you add the 5% to those paying the 90%, that's pretty much the majority of you. So again, key in when Robert talks about the 1127 hardship, and that might apply to your situation. Next, do you use or will you elect Section 475 MTM, which is market-to-market on securities? So you've got 4 responses. Yes, I have it in place. Yes, I plan to elect for 2012. That has to be done by 4/17 in 2 weeks. No, it's not good for me. Or last response, no, not sure. I would like to learn more about it. Okay, the majority of you coming in at that 4th response, not sure, and you want to learn more about it, well, you're in the right spot because Robert's going to share with us what that means, what you need to do, and if you apply for that. And so we're going to be sharing that in a moment. One last question. And really this question should be kind of saved for the end, but I'll pop it up here now and maybe we'll ask again at the end. Obviously, if you get to the end of the presentation today and want to interact with Robert and his company, I would highly recommend you do so. They are experts in this field. And so the last poll question here, would you like help from Green Trader Tax? Yes, no, or maybe. And the majority of you saying maybe. So I think you're in that wait and see mode. You're going to wait till the end of the presentation, which is a fair response, and see what might apply to you and whether you need to engage an expert. So thank you for those responses, and I do appreciate the feedback. Again, that helps Robert in his presentation today and kind of guides him through the topics that we should be covering. So that leads me next to a little bit of a bio and a brief introduction on Robert. He is the founder and CEO of Green & Company, Inc. Their website address is greentradertax.com. He's also involved in greentraderfunds.com, which is an entity that helps traders set up a hedge fund, if that's something of interest to you. We're not really going to talk too much about that today. Maybe he can touch briefly about that company. Robert's also involved in tradersadvocacy.org and very active in that. As a speaker, he's been interviewed and appeared in the New York Times, Wall Street Journal, Forbes, and Barron's. And he's been on CNBC, Bloomberg Television, and Forbes.com video. So very active out there in giving tax advice, and specifically to traders. So that's the key benefit of having Robert with us today. He is a tax advisor for traders, and he knows the ins and outs of the trading business, so to speak. So with that, I'm going to say welcome to Robert Green. Thanks for being with us on the presentation today.
Thank you very much, Brian. That's a great intro. I appreciate it.
So what I want to do to begin here, Robert, we're going to flip the presentation over to you. So let me do that right now so that you can show your screens as you walk through. And so there's the presentation. We're going to talk today, some of the key highlights that we're going to talk about. We're going to talk about electing mark-to-market. That needs, again, to be done by April 17th, and the trader tax status. As we alluded to in the survey questions, we're going to talk about extensions and when you need to have that in, and some traders might qualify for the IRS penalty relief. We'll talk about the cost basis crisis with the brokers, how they've really kind of messed up the 1099s, and you might have incorrect information on your 1099, believe it or not, so you need to be aware of that. And then finally, we will touch on whether setting up an entity might benefit you as a trader. So we have a lot of things to get through here, and Robert's going to take us through each one of those topics. So Robert, take it away.
Thank you, Brian. Well, I was impressed by the answers to the survey questions. I sensed that people rush to file their returns to be compliant taxpayers, and that they want to pay their taxes in full, but yet many didn't seem to know about the cost basis crisis with the new Form 8949, and 56% relied on brokers for securities reporting. That means 56% of you may be very wrong and may get a tax notice from the IRS. The early bird didn't get the worm, it gets audited. 18% relied on Excel for securities, which you really can't figure out wash sales with Excel. So the great majority didn't use the right solution, really one of the only solutions this year that will work, which is trade log software. And that's a third-party program that we add tax knowledge to. Now, that's just for securities, that mess of the cost basis crisis. If you're a futures or Forex trader, you're not part of that mess. Futures have one-line reporting in summary fashion, so you don't even need to do accounting work, and you don't need to report the trades line by line on your tax return, which you have to do for securities. So with futures, it's very simple accounting. It's mark to market. There are no wash sales to worry about at year end. You put that one number on Form 6781, and then you get rewarded with a lower tax rate. 60-40 tax rate. 60% is a long-term capital gain, even if it's a day trade. So basically, the blended highest rate for futures, Section 1256 contracts, is 23%. That's 12% lower than the short-term capital gains rate on securities the highest rate of 35%, almost 1/3 off. Now with Forex, you can have your cake and eat it too. You can have ordinary losses, or you can do an opt-out election to get into the lower 60/40 tax rates like futures. And Brian, you'll probably be asking me questions as we go along. What's all the difference? And everything is taxed differently. Securities have one set of rules. Futures are 1256 contracts. ETFs are confusing because they're securities, but the commodities ETF gets a K1 passing through some futures treatment. The precious metals ETF is like selling precious metals, where the collectibles long-term rate applies. And options on ETFs, we feel, can be treated like 1256 contracts. Forex, I just told you, it's ordinary gain or loss, but you can treat it like a 1256G. So there's a lot of work to do on what you trade and how it's taxed. A lot of 1099s may not do this accounting properly, this tax treatment properly. They may not treat ETF options like 1256. In fact, 1099 rules state that they're not responsible to specify the tax treatment. For example, on Forex, and this is how the cost basis crisis story, cost basis are all the new rules from the IRS asking brokers to be more proactive on reporting things to the IRS. This trading stuff is so confusing, and a lot of taxpayers make errors. I sense a lot of you have. If you rush to file and 34% of you filed already and 36% of you still hope to file, that's very wrong. Traders, only 5% of you should have filed already, and most of you should be filing extensions and sorting this out. And if you relied on 1099s and broker reports, you're wrong in a lot of cases. Not futures, you're right, but in most other cases, you could be wrong. For example, in Forex, if you trade with a Forex dealer, like a Citibank FX Pro, you get a 1099, but treating it like 1256 contracts. But that does not apply to you unless you did the opt-out election. And Citi's not responsible for your elections. That's just an example on how this botched reporting extends beyond just securities traders. So what we advocate in our last blog, and this very similar article appeared in the Wall Street Journal this weekend, is that, hey, focus on the extension. Now, again, 34% of you filed already. Can we do anything for you today? Yes. You may have filed an incorrect return. You can amend it. You can claim trader tax status that you may have left out and have business expense treatment, getting back $8,000 for 2011, 010, and 09, the 3 open years. If you botched your 8949, you can refile and file it right. If you report wash sales that your broker told you to report, you're wrong, because all the brokers have botched the wash sales in almost every case. There may be some where it's not botched. Most of them reported potential wash sales. Those are not wash sales. Those were potential wash sales that usually go away. So they may total up hundreds of thousands of dollars or $10,000, and you may have $1,000. Wash sales means they defer losses to the next year, raising your taxable gain. So you may have overpaid your taxes, and we can now help you fix that. So still stay tuned, because even though you filed doesn't mean you can't fix it. Now, the 36% of you that hope to file on time, it's April 3rd. If you come to us, we're not going to file your return. We're only going to file the extension. The 1099s are going to be corrected. Why file now, get a corrected 1099, and have to amend? The 34% who already filed, many of them are going to have to amend their returns. The 24% who are still working on the extensions, good. Focus on the extension. and focus on that Section 475 mark-to-market accounting election, which is tax loss insurance. If you lose $50,000 in securities and you're a business trader and you have 475, it's a business ordinary loss. Your house burns down, you get a check. The insurance premium is zero. It costs nothing to make the election. Tax rates on short-term capital gains are the same as mark-to-market ordinary income rates, but you get exempt with mark-to-market Section 475 from that capital loss limitation of $3,000. Biggest pitfall for traders, getting stuck with that $3,000 limitation. You're exempt from wash sales when you elect Section 475. Now, if you have a large capital loss carryover, you have a problem because you need capital gains to use it up. And mark-to-market gains are not capital gains. So you have a tricky decision to make. And it may be that you elect mark-to-market for this first part of the year 012 and then set up an entity so you can have a do-over on the election. That's a complex strategy. We'll come back to it later. There's a lot of gold there and a lot of money in that planning. I do that with people all the time. How to climb out of the capital loss carryover hole without digging a bigger hole. You need a capital gains ladder to climb out, and you need a mark-to-market accounting election from digging a bigger hole. It's a little tricky. Now, I'm glad Brian focused right in like on a laser on this. He spotted right off the bat in the survey that 88% of you said you were going to pay your taxes in full, and only 1% of you knew about this relief. This is brand new. This comes from the recession. This is the IRS saying, Congress saying, a lot of Americans don't have the money to pay the taxes. They were really short last year. They lost their job, their business went down, and they're short the money. Let them file an extension, and we'll let them pay the taxes later, and we won't charge them penalties. Now, traditionally, when you file a Form 4868 automatic extension, you want to pay 90%, so it's valid, and that way you're penalty proof. So that's what most of you are used to, and that's good. And by the way, if you have the money to pay your taxes, I prefer that you pay them. What sometimes happens with traders is they say, I don't have to pay the taxes yet. I can keep trading that money. And sometimes they go ahead and lose the money, and then they can't pay the taxes. And then there are penalties and problems. That's unfortunate. But learn about financial hardship. In the past, financial hardship always meant something really bad, and you rarely ever qualified for it. But look at this. Wage earner, unemployed for 30 consecutive days in 011 or 012. Lots of traders lost their jobs, and that's why they went into trading. Well, you're a self-employed individual, and you experience a 25% or greater reduction in business income. Well, that's a little tricky because trading business is not an earned income activity, so it's not technically business income. How you apply this on the 1127 is a little tricky. We're just getting into that now because only a few clients want to try to do it. But I'm surprised that more haven't. So you can come to us and we can help you with that as well. So if you're a securities trader, again, you have to file the extension because otherwise you're going to file a return with an 8949 that doesn't match your broker's 1099-B. We have a whole series of blogs here. We broke this story. We broke the story on how the 1099s were botched, on how it's apples and oranges. There's a whole different set of rules that they follow, brokers. Wash sales are the main culprit. Again, that really only applies to securities traders, not Forex or futures. But wash sales just don't add up. They're apples and oranges. The cost basis reporting rules are that the IRS wants the broker to put down the cost basis, which they phased in. It's only 2011. Now, Brian, I don't know if you want to jump in with any questions here rather than me go off on a long, speech here about it all. Because I'm touching on a lot of topics, but I know you want this to be a little interactive too. And I don't have a PowerPoint today because I figured it was more of an interview.
Yeah. That's fine. I would say keep going.
All right, good. At any point, just jump in and we can break for a few questions in between too, because I know the sound of my voice can, not be what someone wants to hear for 45 minutes straight. But anyway, we broke this story. It's in the Wall Street Journal this past weekend. It started out with dodging cost basis in the Wall Street Journal, then Barron's ran it, then Active Trader, and now Laura Saunders in this past weekend. The brokers are holding this story down. Laura Saunders got Fidelity and Schwab to admit that they have some problems. We think it's a huge problem. We have 1099 showing millions and millions of dollars of errors. We have the smoking gun. We showed them in our webinars. The brokers need to deal with this, get out in front of it, and we're asking for relief from the IRS. We want the IRS to, basically, they have to almost recall these rules. There's a lot of problems with them. The brokers have to recall the 1099s. But we're not filing returns until this is fixed because they're just going to be audit bait. So don't downplay this issue. It's a big issue if you're trading securities. And it's unfortunate, but some people say, hey, Bob, I don't want this mess with securities. Why don't I trade futures or Forex? NetPicks teaches all that. Now, if you're good at trading securities, you should stick with it. And we will get this problem fixed. It can't continue. And we're going to try to get the IRS to turn off the audits and the tax notices over this. That would be very unfair to the American taxpayer. We're not going to let it rest. If you agree with me after seeing our content, sign our petition. A lot of people, this has only been up since last Friday or so, and a lot of people, there's 676 people have sent 1,587 letters to their congressman. A lot of people add comments. Look at these comments. They're fascinating. This is a huge problem. But again, it's in the securities area. Now let's think positive too. Let's not just talk about tax problems. Everybody's got a headache from tax problems. Let's talk about making some money on your taxes. That's the name of the game. And that's where you come to our sweet spot. Yes, we tell you how to stay out of trouble with the IRS, get them off your back, and win. But the main thing we want to do is make you money. We want to show traders how to use trader tax status to deduct business expenses, saving $8,000 or more, deduct your home office, deduct your education. If you're a business trader and you sign up with NetPicks afterwards, that's a business deduction. But before, it may be a non-deductible investment expense. But if it's 6 months before, we can capitalize it as a Section 195 startup cost right off the first $5,000 in the first business year, and the rest straight line over 15 years. So there's a lot of expenses that business traders get that investors don't get. So you come into our Trader Tax Center, you start on trader tax status, and you read about that. And you read how to qualify. You see how the investor only gets a 2%, they have to exceed 2% of their AGI as a miscellaneous itemized deduction. Doesn't include home office, doesn't include education, doesn't include startup. What's left, you put on Schedule A. Then you can only deduct what's in excess of 2%. And then you make it that far and you say, finally, I got a few dollars worth of benefits here. And next thing you know, the AMT comes along and whacks it back out because it's not deductible for AMT. So don't let your expenses go to waste. The trader tax status gives you full unrestricted business expenses for everything, including business interest versus investment interest expense limitations. So you simply file a Schedule C for 2011. You don't have to elect that. You can claim it after the fact. So you can do that right now. You can collect your $8,000 or $5,000 or $10,000 right now. You don't have to do it by April 17th, the due date. Prepare your extension, assuming you don't have the status. Maybe you're not sure if you qualify. Get that extension in, see if you maybe want to elect mark to market, and then you'll follow up with us on this later. You'll read how to qualify here. We have the golden rules right here. It's free. We explain about this new exciting concept, continuous business activity. And if you see that you want more information, just click this button and then you buy our guides. I wrote the original book on this from McGraw-Hill, but you got to get the latest update. This is 40% new content tax strategies, huge. Look at the cover table of contents, the overview, look at it all here. It explains all the strategies right here in that overview, right in these pages here. They're too big to see here, but you'll see we cover lots of stuff. This is free. Just check out this overview. Then you can get our guides. These packages are big sellers because they include the book, the updated guides, and all our examples guides where we show you all these tax returns that business traders file for securities versus futures versus Forex. Accountants buy this stuff. If you want to prepare your own tax return, you buy it. And then if you have more questions, you'll check in with me with a consultation, and that you'll find from the homepage. And if you want tax prep help, you read about it here. You need trade log accounting help, you read about it. You want to buy the trade log, they'll click through from our website and go to the trade log site and see how it works with all your brokers. So back to what we're talking about in these strategies, here's the big picture. It's April 3rd. You either filed or you didn't. Didn't file? Focus on the extension. Think about that mark-to-market accounting election, which is due April 6th, 17th, and we're going to talk about that. And I'm going to show you that part of the blog. Want to fix your return for last year? Want to plan what you're doing for this year? You want to think about an entity? You'll get with me after the 17th. Before, I'm really focused on the 17th. So this is the time when it comes to deal with what you need to deal with before the 17th and put the rest off till afterwards. The entity, you'll save a lot more money on your taxes. You'll be less of a red flag. You'll set up the retirement plan and the health insurance deductions. The retirement plan is going to save you $17,000 if you're married, just on the basic minimum part. So $8,000 from trader tax status, $3,000 to $17,000 more with the retirement plan. This is real money. And if you have losses and you want them to be business losses and you go ahead and lose $50,000, getting a refund of $20,000 is a lot better than having no refund at all because you have a capital loss carryover. Trade Forex, find your way into lower 60-40 tax rates, make an extra $100,000, pay $12,000 lower taxes. We're just scratching the surface. There's a lot more here in terms of tax savings for you. So these are some of the basics. I'm going to touch on this election of the mark to market, and then maybe we'll go to a few questions, Brian, because I'm sure some are building up. People should get them in on the board there. And Brian, you'll see them and I won't. You can always look at the ones and ask me them. But this mark to market, again, we covered it before. You just attach this election statement to your extension. You have to paper file the extension. If you e-file the extension, you can't make the election. So you have to paper file the extension, whether it's the 1127 or the 4868, and just attach this election statement saying you want that going forward. And if you have a big loss year to date, you should elect it. And then you should set up the entity for all sorts of reasons, including a do-over. It's as simple as that. Whether you have a capital loss carryover or not. If you have no capital loss carryover, you should definitely elect it. You have a clean slate to elect it. And it's a very powerful election to get out of wash sales, to get the IRS off your back with that 8949. You don't even have to file it because you're using Form 4797. And if you ever have a loss, it's a business loss. If it wipes out your spouse's income, you have a net operating loss carryback. You go back 2 years and get a big refund check, including interest. It's been a huge moneymaker for our clients. So, Brian, why don't we maybe go to a few questions, and including questions that you have and the other panelists.
Okay. Yep, we have a few questions here. First one is from Frederick, and I think I know the answer, but I want to have you answer this. He's asking, is this information specifically geared for U.S. customers and clients?
Yes.
And he's from Canada.
This is
okay.
Right. Well, let me just talk about that a little bit, okay? Because what's great about questions is that they prompt me to cover some other areas. We focus on the world. We have Americans who trade around the world. We have Americans who open up Forex accounts offshore because the CFTC has new rules saying it has to be 50-to-1 leverage, no more on the majors. You can't do hedging. You have to use FIFO. So Americans open up with foreign brokers, and they really can't. The CFTC rules still apply to them. And when they open up a foreign account, they need to report the FBAR. FBAR has been a foreign bank account reporting has been a huge area for us. That's one thing. Now, we have a lot of non-resident alien traders, a lot from Canada. There are people all around the world who think that American finance, American brokers, American education leads when it comes to trading, and they're right. America does lead the world in financial services, especially online trading. So they may be clients of NetPicks, and then they may want to open up a U.S. brokerage account. And if they're a non-resident alien who is not present in the U.S., they're not a legal resident here, they don't come here, this is portfolio income for them. And that's not subject to U.S. taxation. When you're a non-resident alien, you're only taxed on effectively connected income, ECI, or U.S. source income, which includes trade or business and real estate. So if you buy and sell real estate, it's taxable in the U.S. under FIRPTA, Foreign Investment in Real Property Tax Act. That came from decades ago. But if you just open up a brokerage account, you're going to fill out a W-8 BEN and say, hey, I'm a non-resident. I don't have a U.S. Social Security number. You might have an international taxpayer identification number from a W-7, but that's different. Now, there will be withholding on dividends, but if you're trading Forex, there's nothing to withhold on. If you're not trading master limited partnerships, there's probably nothing to withhold on. And if they withhold a few dollars on a couple of dividends that you get, big deal. And you can get a tax credit, a foreign tax credit back in your home country. So America's a great place to trade as a non-resident alien. And if you're a U.S. resident abroad, you're taxed on your worldwide income. And we have a whole article on global tax issues for traders abroad. We have a lot of blog articles about FBAR and foreign reporting, including the new Form 8938 as part of U.S. FATCAT, where the U.S. is really squeezing all these countries around the world to also report information about Americans. Now there's this Form 8938 where you have to report your foreign assets as well. So that's new this year, but the thresholds are like close to $100,000. Doesn't really include, like a family residence. So, but if you miss your foreign reporting, your foreign bank account has over $10,000 in all your accounts combined during the year, you don't report it, you could be slapped with a $10,000 penalty and much worse. The IRS is busting offshore taxpayers. They busted UBS Bank and the other Swiss banks. There's not an amnesty, there's a voluntary disclosure program from the IRS. We have a lot of blogs about that, we have a tax attorney you can consult with attorney-client privilege, and he'll hire us for you with attorney-client privilege to sort all it out. We've done a lot of work in this area. You can't navigate around those CFTC rules abroad with a dummy offshore corporation either. We're a leader in this area when all things foreign. Unfortunately, we don't do Canadian taxes, though, but we have a lot of experience with Canadian clients. So, Brian, that was a good question, and you didn't even finish it, so maybe you wanted to finish the question. I apologize.
No, that was good information. I do have another question in regard to market. A little bit of a confusion from some of the members on that. So the question goes like this: futures traders don't need to change their accounting method to market. Only stock traders. And another one was kind of do wash. I'm sorry. Let's see. Yeah. So answer that one.
Okay. Mark-to-market accounting means that you mark your positions to market at year end. So you're reporting both realized and unrealized gains or losses. If you're a day trader, you don't really have many open positions at year end. It doesn't apply to your segregated investments. You can still be holding a core position in Apple stock, never selling it like Steve Jobs and hoping for a long-term capital gain down the road. We recommend it for securities traders because your tax rate is the same on the gains, but you unlock the ordinary losses. Futures traders use Section 1256. They have mark-to-market built into Section 1256 by default. Same term, but a different code section than Section 475. So futures traders are reporting realized and unrealized gains or losses, but they prefer to stay in Section 1256. That's the VIP section of the club. Once you're in there, you don't want to leave because very few taxpayers get that lower 60-40 rate, that 12% lower rate, and you don't want to give it up. If you were to elect 475, which you may do, you would give up the lower 60-40 tax rates, and you would have ordinary income and ordinary rates. So why would you do it? There is one really good reason to do it. If you call me up tomorrow in a consultation and you say, Bob, I'm down $50,000 in Q1 2012 in Section 1256 contracts, and I'm trading as an individual, and I have trader tax status, what should I do? I'll say, let's elect 475 by April 17th to lock in that 50,000 as a business ordinary loss. And then we can form a new entity, which you should have anyway, for a do-over election. Now, before I actually say that advice, I'm going to say to you, anytime anyone says to me, I have a loss in futures for 2011, I don't have Section 475. I have a loss in Section 1256 for 2011. Well, there's a great feature in 1256 that doesn't exist in securities. You can carry back a futures loss 3 tax years, but only against futures gains. On Form 6781, where you report 1256 contracts up top in that fourth box, you can check it for the 1256 carryback election. You don't have to do it timely. It only has to go with your tax return. File an extension, you can do it later. If you have futures gains, Form 6781 gains in the prior 3 years, you can carry it back. But then you're getting a refund at 60-40 rates. You still may want to elect 475 to get the refund at ordinary rates, where you get 12% more of a refund. So there are cases where you would want to elect 475 on futures to lock in ordinary tax savings refunds at ordinary rates. And if you know you're going into an entity anyway, you're going to do a do-over in the entity. Because once you start an entity, all the tax, it's an Etch-a-Sketch. It's all clean. So there's very few chances when you get to use hindsight with the IRS on tax treatment. Very few. And when you do have those chances, you got to make the most of them. this is one of those chances right now with the April 17, because the election goes back effective January 1st. Let's say you had a big wash sale last year. It was $100,000, and you had some open positions that had losses too. If you elect 475 by April 17th, those turn into ordinary losses on January 1st. This can all get a little confusing. A lot of people sort this out with me in a consultation, but this is a lot of money on the table with these issues. They're all laid out in the guide. Get Green's 2012 Trader Tax Guide. It is laid out. You can figure it out on your own by reading that guide, but a lot of people still want to consult with me about it and to see what I suggest. And we take the gamble out of it with the new entity, because then we have another 75 days to make the election. So it's all about maximizing your decision points. That's the name of the tax game. So back to you, Brian.
Okay, very good information there. And another add-on to that, does mark-to-market have to be declared each year?
No.
Okay.
Once you elect Section 475 mark-to-market accounting, you're stuck with it until and unless you file a second Form 3115, or a first one if you've adopted it in an entity. You have to seek the consent of the IRS, and it costs like $750 with a filing fee to go back. But we never do that. What effectively happens is if you stop trading as a business trader, because only business traders can use 475. So if you exit the trading business or don't qualify in any given year, you can't use it for all or the part of the year that you don't qualify. Then it's suspended. So if you ever re-qualify, you then must use it again. So if you're using it for several years, and then in 2011 you didn't qualify, you made only 50 trades or 100 trades, and meanwhile you lost 50,000, you're stuck with a capital loss. And then if you re-qualify in 2012, you're going to go back to mark-to-market gains, and then you're going to get stuck not having the capital loss carryover to offset. So that can be a problem. Again, the entity is the way to navigate out, because you can use capital gains treatment in the entity. So entities give you the flexibility that you need to work with the permanency of 475.
Very good. Quick question here. For Forex, do you just report the final profit or loss for the year, or do you have to report on every trade and enter that on your tax form?
Yeah, as I did say already, it's summary reporting for Forex or futures. You're just reporting the summary. Now, Forex, you're not supposed to get a 1099 when you trade spot. All the online brokers are mostly offering spot. If you have an account with one of the dealers, Forex dealers, the big banks, Citi, Deutsche, you might have access to forwards or what they call a rolling spot contract, which they treat like a forward. Citibank does, and issues a 1099 accordingly as a 1256 contract. When you trade spot, there is no 1099. Now, the brokers have some confusion with the reporting. Now, to get your number, you need an online report. TradeLog only works with a couple of brokers for Forex, and it might be interactive brokers, which I think NetPicks a lot of clients use. But for the most part, TradeLog is for security. So when it comes to accounting on Forex, you're not doing line-by-line reporting. You're not getting a 1099 like you do for futures, making it crystal clear, easy. With Forex, you need that online report, and most of the brokers have that, and it will say, it might separately state trading gain or loss. It might say rollover interest, but that's not interest income. That's part of trading gain or loss. It might show some PIP charges, which are really transaction costs, part of trading gain or loss, just like commissions are. They're part of trading gain or loss. They're not a separately stated expense. And the problem is that some of these Forex brokers when you have rollovers, a lot of traders they enter a trade, they don't get out of the trade fully within 2 days, which is what spot is defined at. Forward settles in more than 2 days. So they roll it over. Well, we think it's a realized transaction, and the brokers don't pick it up that way. They pick up half of it with the rollover interest, but not the other half. So there's really some confusion there, and we see that as an area that the IRS may act in. And you may want to make sure you're picking up your open rollovers at year end. Now, if you do file the capital gains election, so this is what Forex traders do. They start out, it's by default ordinary gain or loss. Well, if they go ahead and lose 10,000 or 20,000, ordinary losses are great. They can offset it against their wages or their spouse's wages or income of any kind. There's no capital loss limitation. That's a wonderful thing. Remember, the securities trader needed to be a business trader, needed to elect 475 to get that kind of break. The futures trader doesn't just get that break unless they do the same as the securities trader, and then they give up 1256. Forex trader had that ordinary loss treatment dumped in their lap to start. Now, why would a Forex trader make the capital gains election? Well, if they have a capital loss carryover, they would prefer to have capital gains to soak it up. Ordinary gains can't soak up a capital loss carryover. But a lot of Forex traders know that they can navigate further, not just capital gains, but go further into the lower 60/40 tax rates, treating it like 1256 contracts. That's 1256G. A whole section of 1256 set up just for this, foreign currency contracts. But when you read the law, it only talks about forwards, and most of you traders only have access to spot. So we make a case to treat spot like forwards. It's not a slam dunk. We've worked with the tax attorneys at the IRS in charge of Section 988 and in charge of 1256G. We're going to be part of any law changes. We're at the cutting edge of this. We've done the research, done the arguments, and if you make a fortune and you won 1256G, a lot of clients get tax opinion letters from us, so they're penalty proof. We haven't had the IRS challenge any clients on it. It's worked. But the IRS seems very out of touch on Forex and very behind the 8 ball. I mean, they allow these internal opt-out elections. A lot of taxpayers might abuse that. We think that that would be unethical and wrong, and we would not do that. But there is some areas here that the IRS may want to improve, because a lot of people trade Forex. So that's some information about the accounting, the tax reporting, how you file it on your tax returns. Back to you, Brian. And by the way, for Forex, again, if there's a hot topic, come to our website, look at the quick links right here. Click on Forex. That takes you to the Forex tax treatment page. It takes you to our guide section page. It takes you to webinars we've done, lots of blogs that we've written on Forex tax and regulation. So always start on a quick links page if there is one for you. It's a great way to navigate around our site where you're on the path you want to be on, because we have a lot of stuff on the site. Back to you, Brian.
Next question is from Aaron. He says, I have been trading Forex with some success, not ready to quit my day job just yet. When should I start looking at forming an entity, and what type?
Well, we only recommend entities when you have business trader tax status, business treatment. The entity strategies are to deliver business expense treatment with less of a red flag than Schedule C. It's to have a tax-deductible retirement plan strategy and health insurance. It's about all the business deductions and AGI deductions and perfecting it and making it look better with an entity. Well, if you don't qualify for trader tax status, all those strategies wouldn't work for you anyway. So your only reason to have an entity would be that maybe you have a parent in with you, and then you always have to be cautious of investment management rules and licensing. Or you want to avoid that 89-49 as a securities trader. And in a very, very few cases, the retirement plan strategy can still work for you. Because with an entity, you're paying yourself a fee. Well, it's a business deduction, and then it's business income. It's a wash for gross income, but it unlocks the AGI deduction. If you had investment company status, investor tax status, the paying the fee would be an investment expense, and it might not be fully deductible, so it's not tax efficient. Entities make trader tax status look better, but they don't deliver trader tax status. So we want the entities for business traders. Forex, if you have a job and you're trading Forex at night, and you have a $5,000 Forex account, but you're day trading all day, every day, all night, you might have enough frequency of trades, but your account size is really too small to impress the IRS on trader tax status. You might have very few expenses, so you don't really need trader tax status, and you might have a retirement plan and health insurance at work. So what do you really need out of trader tax status? Maybe not a lot, because you don't need 475, Section 475. You can do the opt-out election from 988 into 1256G as an investor without trader tax status. So a futures trader and a Forex trader may have a little less need for trader tax status than a securities trader. And if you have a retirement plan and health insurance at work, again, where your spouse has the health insurance, it's less of a need. Trader tax status isn't that easy to qualify for, and if you come up a little short, I'm going to really find out how much you really need it. If you don't really need it, and there are other things you can do, we're going to focus on that instead. Back to you, Brian. You still
okay,
there,
a lot
Brian?
of good questions coming in. Yes, yeah, and I'm going to say this: there are a lot of specific example questions coming in that we just are not going to have time to walk through the analysis of each one of these.
Well, those, Brian, people can have consultations with me. They have specific questions for their account. They have access to me before the 17th. Why? Because my partner, Darren Neuschwander, heads up tax preparation, and we have 20 CPAs and accountants just working on extensions around the clock. I'm not doing that. My schedule is clear for the consultations. You can get on my schedule with Mindy. Just contact customer support and read about the consultation. Use 15 minutes with me now and save the other 15 minutes to after the 17th. You don't have to do the whole 30 right away. Go ahead, Brian.
Yep, that's what I was going to recommend. So pop your contact information up there on the screen again and leave it up there for a little bit while we're talking.
Good.
Next question is from Abdul. He's asking, if we are a prop trader, can the K1 amounts be used to offset previous and current retail trading losses? And I'm going to add to his question, can it be used to offset any business expenses?
Well, Steve, there's a problem there, okay? Prop trading is different from retail trading. We are the experts in prop trading. We've been the experts for over a decade. We've covered the story about problems in the industry, issues with the regulators. We have added a whole new chapter to the guide this year with everything on prop traders. Let me answer the question. If you're a securities prop trader, most prop trading firms file the 475 election. So your K1 shows ordinary income. If you have a capital loss carryover, you can't soak it up because the income coming off the K1 is ordinary. There are one or two prop trading firms that haven't made the 475F election, so they are going to pass through to you short-term capital gains, which will wind up on your Schedule D and be offset by your capital loss carryover. Now, when it comes to expenses, you don't have to worry about trader tax status. The firm, if you're a K1 member, the firm has trader tax status, and you get that treatment passed through on your K1. Now, if your firm has an accountable reimbursement plan, some do, like Bright Trading does, you need to use it or you lose the benefits before year end. They call it use it or lose it. And so let's say you made 100,000 with one of those firms, and 100,000 would normally appear on your line one of the K1. You submit 20,000 of expenses. They then change your K1 to 80,000. That's nice and clean. Now, if they don't have an accountable reimbursement plan, which a lot of them don't, it's almost more convenient for you because then you can do unreimbursed employee business expenses, UPE. So even though it's not on your K1, you can take the home office and all your expenses, not on a Schedule C like a retail trader, but right on your Schedule E, right under where you put the K1 income. We show you how to do that. Now, the one thing you can't do in most cases is arrange, financially engineer the earned income you need for a retirement plan contribution because the K1 doesn't have any earned income. But if your firm allows you to join as a single member LLC, and then we file an S-Corp election, we can do that strategy. So now, if you're an independent contractor, you can be an independent contractor, an LLC member, an employee. Definitely get the guide because the guide, a lot of the content here has been up here for years and it's been refreshed, but the guide has all the latest and greatest on prop trading. Put a lot of work into that chapter. It's totally new this year in this year's guide, which really just came out a month ago. So I explain if you went with like VCM or iFund Trader or one of these hybrid education prop trading firms, we think that it's kind of trouble, skirts under the regulators. Is it education or is it prop trading? Well, if you can't write off your education, maybe you can allocate some of that payment towards prop trading and then it's a lost deposit and then we show you how to write off the deposit. Even if you didn't get a 1099 miscellaneous because you didn't make any money or you never graduated into prop trading. You kept doing demo trading and you never got live money from the firm. Well, if you never got the live money, then we say you're not in business and you can't have a Schedule C and you don't have a business bad debt on the deposit. And then it's a capital loss on the lost deposit. It's a very tricky area. I don't want to squeeze it all into the scope of this session. There's a lot to deal with on prop traders. Get the guide and consult me about it. Back to you, Brian.
Well, we're about at that hour mark. Robert, I'm not sure where you're at as far as if you want to take more questions or if we want to bring it to a close. So I'll throw that option out to you.
Well, I think we covered really a lot of things that we wanted to get done today. And we got a lot of good questions in too. I mean, if you have a couple of more great questions that you want to address, I'm fine with going a few minutes longer, but I think we got a lot done.
Yes, we did. And I want to stress, if you're a layman at this and a lot of this seems confusing and over your head, you have to engage a tax expert. And, Robert is that expert. So I would encourage you, again, Robert, if you want to pop your contact information up there, to get in touch with him and make sure you are set up properly, your structures are set up properly, and that you're not going to make any mistakes in this process. So let's just go through. Again, I want to stress if there were a lot of questions that were kind of complicated that were submitted. Again, this forum really isn't for that. An individual consultation with Robert would be best. And so I would encourage you to get in touch with him. Real quick, how many trades per day qualify for trader status? That from Billy.
Okay. Again, for that, you go back to the tax center. Always, that's your first stop, Trader Tax Center, Trader Tax Status. And you see our golden rules right here. We want to see trades full-time or part-time, all day, every day, 4 hours a day. No sporadic lapses, 75% of available trading days, 500 round-trip trades for the year. Could be lower if you're full-time. And if it's half a year, then it's half of that. Proceeds in the millions. Day trading, swing trading. Intention to run a business, to make a living. Significant tools, expenses, home office. Material account size. Automated trading, if it's all Outside services, it doesn't really count. Outside money management doesn't count. Trading retirement funds doesn't count. There's a whole chapter 1 of the guide. The whole chapter is on trader tax status. Lots of examples of people who qualify, examples of those who don't. This is the linchpin for unlocking a lot of the benefits. You want to do this analysis for 011 and 012. It's a great starting point. Back to you, Brian.
Okay, one last question. Yes, one last question, and we are going to wrap it up. So this one from Richard. He's asking, are options considered securities?
Well, that's great. Options are everything. And instead of putting our separate page here, they're everything. When you trade stock options, they're securities. When you trade index options, they're futures, Section 1256 contracts. When you trade ETF options, we believe that they're treated as 1256 contracts, almost all of them. When you trade futures options, they're 1256. So basically, a lot of options can be 1256 except for the heart and soul of options, which are your securities options, your stock options. Those are securities. And when you do wash sales, you have to do wash sales between stocks and options because taxpayers follow the rules substantially identical, which is defined as stocks and stock options. Broker 1099-Bs don't do that. They only have to report identical positions, the same symbol. Competing programs to trade log don't do substantially identical. They do only identical. And that's why I say with confidence, unless you're using trade log, if you're trading options, you've probably botched your wash sales. If you rely on the 1099-B or the brokerage reports, you've botched your wash sales. Options are not on the cost basis reporting this year. They don't get phased in until 2013. So options can be very confusing for traders, and it can be harder to qualify for trader tax status if you're bunching trades around option expiration dates. So if you're an options trader, you definitely want to check with us, and it's a very popular area. Back to you, Brian.
Okay, and that's going to wrap it up for today's webinar. Robert, I want to say a special thank you. A lot of good information presented today, and some food for thought. And I would again advise you, if you have any questions at all, get in contact with Robert's firm. And Robert, if you again just want to pop up your contact info really quick there before I take the presentation back, and that way they can get in touch with you.
Great. Mindy is really busy. We have one main person on the lines because she really knows our business inside out, all the services. She doesn't sell you anything. She'll point you in the right direction. She'll take care of your needs. We are being flooded with calls, as you can imagine, with all the media attention lately. We can handle the business. We have all the CPAs ready to help you, and me too. But you may have to leave a message, and Mindy will get right back to you.
All right.
If she's on the phone with someone else.
Very good. Well, again, I want to say, Robert, a special thank you today for taking time out of here. What's a busy schedule right now, I'm sure, and very good information shared. I do want to encourage you to continue. I'm going to pop back to my screen here really quick to sign up for our ongoing author series so that you can stay informed when we have these kind of presentations. And to do that, you can go to, whoops, let me get that off of there. You can go to netpicks.com/author series and sign up. And if you want to get in touch with us for any reason, you can do so. Our contact information on the web or on the slide there, info@netpicks.com, or if you want to give us a call, 949-481-2396. So again, Robert, thank you. I do appreciate it, and been very informative today, and thanks again for your time.
Thank you very much, Brian. I really enjoyed it, and good luck to everyone on your taxes.
Thanks, everyone. Good trading to you.